Okay, hi there guys. G'day Farrow. Just let me know if you can hear me loud and clear. And Merry Christmas, I guess. Oh, it's a few days away, but it'll be the last time I probably speak to you before Chrissy and the New Year. Hope we all got something planned to unwind over the Christmas holidays, New Year holidays. I'm a big advocate for that. If you stare at charts and things as long as I do, then you probably want a bit of a break just to unwind, and it's always good to start with fresh eyes as well and a fresh mindset. You do get drawn out, especially the way the markets are lately. Get a bit worn out into the end of the year. Been doing it for a while, and of course the market gets hammered towards the end of the year, and a bit of volatility makes it even harder. So it's best, get a break from your charts, get your eyes back into focus, and then come with all guns blazing into the new year. And also, what I like to do, I basically, it's probably I do it a lot during the year, but I know a lot of people with your charts and things like that. If you're a big technical analyst, it's always good just to delete everything off them every once in a while, just so you get fresh eyes. Because if you're always going to be biased by what you put on there previously, because you remember what you did, you remember what you were thinking. It doesn't mean you're right. Anytime you put your support, resistance, your lines on there, your zones, all that sort of stuff, your anchors we call them. Doesn't mean you're right. So sometimes it's just good to, I'll probably do it once a month to clear off my charts and start again. Start back from your weeklies down to your dailies and so on, and just break it down to different zones, get a bigger picture of what's happening. It's always worthwhile. That way you probably find a lot of the times, and that happens for me anyway, a lot of the times when I do that, I ended up with a different bias. You could just completely change your bias, and which is always important because to making sure that you're on the right side of the market rather than the wrong. I mean, sometimes I'll find that if I've got the wrong bias, I don't get into trouble. It just means I'm not making any money um, on a potential trade that I'm waiting to buy it, and it's a definite short. Or you analyze it differently. You start looking for shorts instead of longs. If you're looking for longs, you just don't get in. But if you start flip it over, bias to the downside, you can actually start looking for shorts and see some really good setups. So it's a good idea. It's probably a good time just to, if you're looking at your charts, to drip through some charts, ASX, crude, copper, all these sorts of things in the market to make the market move. Dow, what's happening over there, bonds, all that sort of stuff. Just get a bigger picture. Take some time, relax. So always a good idea. All right, I'll get rid of that, even though that looks really good. Merry Christmas anyway, if I haven't said already. So let me just remember. I've got to remember what exact dates I said um, the stream. So we're going to obviously shut down the stream. Today's the last one for the new year. Oh, sorry, until the new year. Um, I think it was basically from Christmas Eve. What we're going to do, so anyone that gets alerts that we send out that's subscribed, we won't be sending any new stuff. It'll basically just be managing. We've got 3 positions at the moment and 1 open order. It'll just be managing those. I'll just keep an eye on those. And if we need to do anything, we'll send out the alert, but there won't be anything like the morning report or anything like that. It'll just be your basics to make sure we can manage the positions accordingly. And I think we're back, I said the 10th. Let me just check. 10th or 11th. All right. Here we go. 2019. So the 24th of December to the 11th of Jan. So I think the 11th is a Friday. Just be wary, we'll be offline then. So I hope everyone's got something good planned to unwind. Now let me get rid of, let me just get that up. So that's charts. We'll get into it. So overnight, I don't know if anyone saw early hours of the morning. Let me just get on the Dow. It got poleaxed basically. You see the Dow just get hammered into the close. Let me get the futures. Um, so this is the Dow. Let me get the last. So what am I on? I'm on the daily. All right, let me get 30-minute chart, and you'll see what happens. So you can see that was around 6 a.m., 5:30, 6 a.m. So after the announcement, they had FOMC announcement. They raised rates by I think 0.25%. it was widely expected. That's the thing. So this is why I think you've got to be concerned about when the market's driven by fear as opposed to driven by fundamentals or technicals. At the moment, I think we're edging towards fear because everyone's, I don't know whether they were starting to factor in, a potential them holding off on rates this time round or no more rates for next year. I think they were talking up 3 out of 4 maybe next year. This is back in September or earlier, 3 more, and then they less hawkish, more dovish. So they're talking up 2 potentially for next year, but obviously to keep on top of the data. So I think people were just expecting to hear, okay, we're raising it. We raised it overnight. They're raising in December, which we widely expected, and then potentially nothing for next year, which I can understand. But the market reacted pretty hard. You can see it's just caved in. So pretty much, well, we're selling off from around, say, 24,000 and just got down to 23.4 where we are now. So it's a 600-point drop over the space of an hour or so. I was even watching it within 5 minutes. It dropped 200 or 300 points. A few minutes even, it was that fast, just coming into the close at 8 a.m. So yeah, it was kind of a strange reaction, maybe a bit of an overreaction. I mean, we'll have to wait and see, but that you can see by the speed and the volatility into the market. And it's not fundamentals because you would think that if the Fed's starting to wind down, like they mentioned, so it was actually they changed their tone from the last release in September. They were a bit more dovish, which is you would think potentially better for shares, but the market didn't take it that way. Obviously, they were expecting a bit more. And it's probably Trump. Trump comes out and says a few things. They shouldn't be raising rates, da da da. Obviously, that benefits him. That benefits the economy. They don't raise rates. They let it inflate and keeps kicking along nicely. So when they go into the election, so he looks good. But that's not the right thing. And I think the Fed are doing the right thing. They're crunching the numbers. So if they need a rate rise, they need a rate rise. That's the way it is. But I think with the equities being so overinflated and fear starting to kick in, coming into Christmas, we were expecting a Christmas rally, just hasn't happened. A Christmas fall instead. Um, yeah, fears sort of driving this market, and you can see just the way it reacted lower. So I thought we'd have a bit of a look at that. Our market, actually, in all honesty, our market's holding up quite nice. Let's just look at down 7 points. And no, that we're just hovering around that 55.50 mark. It's still, I mean, this trend on the daily is still well and truly intact. We spoke about this level 59.50. The fact that it didn't, it bounced off the low straight back up, retested that lower high. The fact that it didn't break it, should have been cautious by then. And you can see that took out the lows, little bounce. So it's still holding. You can see it's well and truly holding the MAs. MAs are spread to the downside. It's holding. So until we get some sort of anchor taken out. So really, at the moment, I'm leaning towards, you can say a pop up through the highs at 56.82. This high here, let's just mark it up. We'll get that marked up just so we know what levels we're looking at the moment. And I'll do that again. That's what I like. There we go. There and there. All right, so my phone's probably going to go off in a second. You can see this is obviously the trend down. I'm a bit slow today, aren't I? There we go. So we've got our trend down here. We've got a resistance zone, potentially to worry about later on, hopefully down the track. We have a minor sort of inside level as well. So you can see the markets popped down, popped up. So it's just your typical standard Dow theory, I guess. Pop back up, pop back down. And I'd say this is a minor level. I mean, I wouldn't say it's key, but if we can sort of hold, I'm just thinking from a bull perspective. If we can hold that level and start to work our way back up, look, I think the US, it's got a lot of work to do. The more entrenched this gets and the MAs are down, the harder it's just going to do to sort of break this trend, break the fear. There's all sorts of buyers. People can easily close out on the way up if they're taking profits. It's easy to take profits, but for some reason, your general stock trader is a holder. They don't use stops. They just hold, wait for it to come back. So if they haven't really got to grips with this pullback, this major correction, and they're still holding, there's still a lot of fuel, potential lot of fuel out there to edge out of the market. And then you've got on the flip side of that, if the market starts getting out of hand, you're going to have all the shorters jump into the market. Then you get everyone whinging about CFDs. They shouldn't be able to short, but that's just the market. That's the way it is. You've got to deal with it. Yeah, so I mean, if you can't beat them, join them in my respect. So that's why I always like to spruik it's important to be able to trade the market, not just invest in the market, if that makes sense. Investors are sort of looking at the fundamentals of the stock. They're willing to hold. I'm a trader. I'd rather trade the market. If I'm wrong, I'm wrong. If I'm right, I'm right. If I'm right, run it. If I'm not right, where am I going to get out? Where's it running out of steam? So always looking for having a plan of attack if you're right or wrong. And that's trading as opposed to investing, if that makes sense. So on this side, we were happy to close out. So I was happy to just get out and potentially looking at shorts. So we've got a few more I want to just go through. I was chatting with Lauren on the forum, was it yesterday, talking about NEA. So we'll go over that and a couple others I just want to show us a short example. And there's some that, it may be hard to short, but if the market sort of drops, there's some that it could be primed to get actually hammered. And it means it could happen hard and fast too if this market continues to roll over and putting pressure on, just squeezing out longs. Because you know that every time it's dipped down here, there's been some buyers, there's been buyers, and they're just going to continually get squeezed out of the market if they're not careful, if they're not running stops, if they're not trading the market. So that's the ASX. Probably not too much to look at. Let's just get over where I've got those. Dow, if you go to the weekly, it's just down on this key level. So it's broken pretty much this uptrend. We've spoken about this before, and this S&P would be the same. So this is, for me, more concerning than what we were looking at before. There was a potential that it could hold. That's the trend here. So that's your weekly. We've probably broken down a while ago, but the S&P is sort of, the broader index. We're right down on that support zone there, even broke it, just touched through it overnight. So if we can't hold off that zone, if we punch through, if we get through much lower, I would expect it could grind higher. And remember, if it punches lower, then we start to get this back and fill, we call it, back and fill back above the support zone, be concerned that this kind of action could lead to another big sell-off. All right, as opposed to something, then it gets, a straight up retest in the back and fill back down again. That's what you want to see if you're a bull. This is not what you'd, ideally want to see, especially if it pushes through a support zone by quite a bit and then starts to back and fill back up. Because what that'll do is drag in some buyers that go, oh yeah, we're going to hold up that support zone. But the deeper it pushes through, the less likely I would expect that we're going to hold it. And what you'll do is back and fill like this just to trap in some longs. By trapping in longs, you're building the fuel to move back down again. So at the moment, that's what I'll be having my eye on into the Dow, into the US. If we go over to the S&P, like I said, that's broken a bit harder. So that's a bit more concerning on the S&P. The fact that it's pushed down and it closed down by these previous lows. What was that low? 25.32, and the low of 24.88. So that's a fair break, and it's closed below that previous low. So yeah, it may not be. I mean, this Christmas may be a good time just to go back over your charts, look at your markets. What do you want to do? What do you want out of next year? Plan for what, if the market does have a good correction, what are you going to do? How are you going to attack it? How are you going to make money? If it is, and you're not a shorter, then look to just sort of hover out of the market and look for your good quality setups. It means time going through. I mean, if you're a fundamentalist, it's going to be a bit harder. Just reading through, but picking your stocks, picking your prime stocks. I think you can't get past technicals when you're looking for entries. So that's why I'm happy just to flick through some stocks and make a list of some really prime setups. And only take them if they play out and the market potentially is bouncing, even if it's if it's heading south, you want to look for a bounce to be jumping into some prime setups. Because the unfortunate thing is, and if anyone that lived through the GFC, you could have had the world's best stock. When that was selling off, people did not care about anything, what the support zones were, or what, they weren't respecting for support zone. It was fear that was gripping the market. And then of course shorters as well, loading up and shorting into the market as well. But that was, I guess on the weight of it, the percentage of shorts is not that high. It's more just longs that are bailing than anything else. And it was actually hard. I mean, everyone blames short sellers, but it was actually hard. If you were trying to short, there wasn't any borrowing capacity at any longs to borrow. It was just people exiting um, in general. So that's why the market caved in. So you've got to be, they didn't care about the fundamentals of the stock. Like I said, it could be an absolute cracker, well undervalued, and it could still go lower. I mean, who's to say how low it can go? You never know. You just got to wait and see. So that's why it's good idea just to flick through a few things over Chrissy if we are going to have a bit of a breakdown. I don't know. I mean, that's what the talk around town is at the moment. But there's always bears. Bears are loudest when hopefully we're finding a bottom. But we'll have to wait and see. Anyone's got another view on the ASX or the markets in general? Where's the FTSE? So they're still having issues in Europe with Brexit. So I think they've got a few issues to run through there, which is going to keep them capped, even heading south. DAX, where's my DAX? There we go. Your weekly, your monthly, when the monthly's up, but it's well and truly on the monthly. It could be in a zone on the DAX, but that weekly's heading south. That's got a big change to deal with first. You'd want to see it pop right back up to the MAs, come back down a bit like what we saw back here. Back in 2016, the market headed south, sold off, good bounce above the MAs, and you want to see that pull back to build that higher low. So it's kind of the same on most of the markets, I'd suggest. Same with the FTSE. You want to see it bounce right back up, not this little on a bounce. And you've got a minor level here on the FTSE at 72, so 72 even. This even you don't want to see it bounce to 7,000 and then start to show some red candles because I think it's going to roll over further. You want to see that 72 taken out, good bounce, then a pullback to build a higher low. All right, so let's just see how we're going. The Dow, maybe China, if they start coming to the deal, the US and China on tariffs, start sorting their issues out, that could be the fuel to bring some buyers back into the market. But at the moment, just after last night's action, and last night's important one, we just drove through on the S&P. So the broader market, we drove through that. It's around 25.50, finished just above 2,500, 25.06. So a tad concerning at this stage. Now let's just go over, rather than play around too much. We've got a couple of, I want to go over a couple of charts. I found it interesting, and I hope Laurent, the chat we had yesterday was interesting. But this is what we're talking about. NEA, NEA, so Near Map Limited. Not a big trader, but it's more just breaking down what we're seeing on the charts and just trying to analyze it from a bigger perspective and just drilling down. Where you drill down to, I mean, it's up to you. You might drill in a half an hour chart. I tend to sometimes just take a look at the half an hour just for some finer detail. That's if you are a chartist or a technical analyst. But even this price action on the half an hour chart doesn't look good at all. You can see the market sort of had this bounce, pull back. This high low should have led to a push up if it was strong through the highs, didn't, lower high, then broke the lows, back up. We could be starting to roll over. It's extended up here as well, nowhere near the previous highs above 160, 161. So yeah, it can give you some finer details. We've got the daily chart here. So for me, I think we'll start on the weekly and we'll drill down. Just go over what we were talking about. So obviously you can see I'm biased down, even though this weekly it is rising. I'm potentially biased down. I don't like to say I am biased down. In normal circumstances, you might have to think twice about this. You could be biased up, but you'd be looking for, obviously, onto your daily for the setups. If it's a bull market, but we're not in a bull market, we're sort of fear-driven. So you've got to take that into account. Anyone that doesn't, you're at risk of getting steamrolled, I guess. Especially after this market, you can see for the number of years, 1, 2, 3 years, pretty much went sideways. It did oscillate, like it had some fairly decent, I guess, decent range in percentage terms, from 40 up to around 90, but it wasn't really until the start of this year when it started kicking off, and that was really driven by this high low. You can see just in here, the market popped up like it did previously. We had this high, grind back lower, took out the high, but this retracement was too deep to be bullish on it. All right, then we had this chop. It did hold a little inside level here, and that's your good signs. That's a bit different to what happened in the past. You can see this base, it didn't really, I don't really call that a retest. There's differences in retest. Actually, just touch it and be careful. Actually, I'll close that. What I want to show you, the two different, I put a lot more weight into something when it's corrected in two different styles. So if we just look at this, you can see through here, okay, the market's come back up, it's popped back up, retested that low. I don't call that, it's not a strong retest. It's just really trading low. Those buyers have stepped in. For me, I don't find that as a strong signal. I just find that something you just got to keep an eye on. More than anything else, I don't see that as a strong signal. And that's a lot different to something that's broken an anchor. And like we always talk about this anchor. So if we've got this downtrend, so for instance, we've got this downtrend and we've got our anchor levels. We always talk about this. The market's moving down. That's your Dow theory. You've got your anchors here, your lower highs pressing in play. And if we bounce back up, this is sort of the scenario that we said, okay? So at this stage, when the market's down here, that becomes your anchor. That's your, once it's retested that low, that's your anchor. Now, if we just start playing around here, I don't, uh, two things. Two things. So if we hold below that anchor and do this and build a high low, I don't find that a super strong, buying at that level because you can pop up to the anchor, then roll over. The anchor is the key thing for me. And I guess with most traders will be looking at something similar, but if the market hasn't broken your anchor, you still got to be biased down. I'd only be biased up when it's broken the anchor. And then looking for your high low. Now that's different to say this scenario, I forgot that's your anchor level, this scenario where the market's, say it's pressed down into that support zone, then we pop up, okay, we break that anchor, and then maybe we grind back down to build your higher low. That for me is a lot different to this structure. So this structure here, if you're buying, you're looking at, because you're trying to search for those higher lows, that's a higher low, yeah, but it's in context to still a downtrend. That downtrend is still established. So you could easily pop back up, retest the anchor and then, basically roll over from there. You don't know what's going to happen. But when we retest that low and then straight back up to break your anchor, that for me is what we always talk about when it's coming out of contraction. And then you look for your high low. So, sorry, you got expansion lower, the market's starting to contract, and then you go into expansion again off your higher low once it's broken anchor. Does that make sense here, guys? So that's, a fair bit different to what we were just, looking at here, as opposed to, something like this. You pull back here, you're starting to hold your high low. So that's different to the price action we've had in the past. This is a major high low. It's grinding lower, and this, if you got in here, you may have done all right, I guess. But this pullback, if you're sitting in this, you may have been stopped out. You may have got into your long here. I mean, you might have just been squeezed out of the market. Now that's a bit different to what we saw, the strength at the start of 2018. All right, so I just want to draw this up. So back to what we were talking about, the price action overall. So I got sidetracked there. But you can see that there's a high low in here. Then we've got this really, that's a lovely high low, because what we're always looking for when it expands, probably similar to that leg up, problem is we had this leg down instead, really shallow retracement and started to hold. So if you were going long here, prime. I know that anyone could argue that you could have got long there, but I don't think that's as prime as maybe just in this zone a little bit earlier. That would have probably been a legit entry when you're breaking up. Just if you can see that, for me, that would have been fair enough. Just buying in that sort of congestion in there, that's fine. And that was gunning off this higher low, this higher low. So you've got quite a bit of price action there. That's your first real sign of strength, that it's starting to trend. Okay, so when you get the market, who's to say this wasn't going to pop up and pull straight back down again? A deep correction where it's really not going to trend. It could get choppy and then hold a lower high and come all the way back down to the lows. Instead, this was your first real that was starting to have a leg up at the beginning of 2018. So that's great. We popped up there, but you've got to, what we'll just do, I just want to clear that off. What we're looking at now is this leg up here. So we've had a really strong leg up. So from there, especially considering the markets where we are at the moment, that's quite, especially in context of what we've seen in the past few years. Okay, so we've had a nice long, strong leg up. A lot of buys loaded up into that. Potentially there's a few buys that got out here, but maybe not. Maybe there's some believers. We don't know. Now this pullback, it was, you could argue, okay, it was off the highs. You know, we were getting a bit ahead of ourselves when we, touched above 190. That's fine. That's a good little healthy correction. The fact is, it actually broke through the anchor level, and you've got to take note when it breaks through an anchor level. Okay, so what we're trying to do is assess this now. That's your first heads up. We broke through the anchor, this trend up, so maybe this leg up is over, or maybe we've got to reset ourselves, hold a higher low. We might contract. By contract, I mean something like this. Price contracts in, and then it's got to go one or two ways. It's going up or down. You know, you can break up or you can just break down. That's your sort of your two options, but you don't know what's going to happen just yet. We may be at early stages. The reason why I'd be leaning towards a short is because you've got to take into account what's happening in the global market. You know, if this market starts to roll over and we find some serious pressure, all right, as of last night, the S&P's broken down a key level. The Dow's sitting right on top of a key level, which potentially is going to break down as well if the S&P. And if the S&P goes down, the Dow's going down with it, and vice versa. So yeah, if that plays out, that's why I'm sort of in the back of my head that if that plays out, this could be a perfect short, and I would expect that leg down to be accelerated, you know, potentially down to one. It could even go a lot deeper. All right, we could go, down to 90 cents, say 80, 90 cents. It could be a really deep correction. So the fact, and it's all based around your weekly chart breaking that anchor level, because we've got two things. This could be a lower high, or it is just going to grind back up. So if we go into the daily, this is why I'm always a bit of an advocate of looking at your weekly, especially. It's a lot easier. I mean, people get a bit complacent when the markets are going up and it's a bull market. It's complacency because it's a hell of a lot easier. Anyone could be a genius trader when the market's in a bull market, because a lot of the times it's just everyone's buying anything. You know, they make some profits, they close that out, they're building their account, they jump into anything in a way. I'm not saying that happens to everyone, but that's sort of a general a market theory. But when markets are in a bear market, or the markets are getting tentative, or they're starting to become fear driven, you've really got to know your structure, and you've really got to take into account what's happening with your price action. So if we look at the daily chart now, let's get that. We've got levels. So that's our weekly break, and you can see that's quite clear now. The market's pressed up. This is your pullback, pressed up, and then you start getting your pullback. Oh, you could argue that that's your anchor as well when it break down through that anchor, but you've got this big pullback off the highs. What we've done since is rally back up, and if you just look at this leg alone, what's happening with that leg, it's done the same thing. Okay, so if you add this to the mix, what we were trying to do from the weekly is trying to figure out, okay, have we got a lower high, or are we just heading back up from the weekly? Okay, remember that's your weekly chart. So in context of that, it's harder to see because we haven't got the finer detail. The market's pressed back up. Okay, we've got it through the highs. The pullback broke the anchor. Okay, you can break the anchor. Doesn't mean you can't turn around and head back up again off a higher low. So you've got to have, what scenario are we looking at? If you just traded purely from the weekly chart, okay, that's fine, but then you'd probably have to buy it on a break through 175. For me, that's too stretched. I wouldn't be doing that. But that's the way, with my style of trading, I'd have to attack it. Then I'd have my stop below 145. That's fine. I'm I'm a big advocate of just pushing down to the daily time frames to give you finer detail of what's happening and get a fine-tuned entry. So if we're doing that, what we're seeing is this leg up here is doing the exact same thing. You've got your anchor on the weekly broken. We've got the anchor on the daily broken, and this pullback through the anchor. And you can see this little pop up here. It's from the stochastics. We've got back to the 50. It's running out of steam, in my opinion. So this could lead to your lower high on the daily off, in comparison to this leg up. And this is a major lower high. Does that make sense here, guys? So what we're seeing, this is your major weekly lower high. This is your daily lower high. So we've got the pressure, the pressure of sellers that are starting to come in after a break through the anchor, after a break through the anchor. All right, so for me, I would be biased down on there just off that overall price action, because there is still, off the weekly, a lot of fuel that could be dragged back out of this market. We've had this big leg up, probably take it back a bit, this big leg up. So there'll be a lot of bag holders up here. Potentially anyone that's bought it above 140 that's seen that pop. It's come back. They've been underwater for a while, back in front a bit. They would probably, if they haven't been cleaned out, they would probably be the first ones to go if it starts to pull back again, because you do not want to see the second time round. You do not want to see, well, I wouldn't, um, go back into the red again when you've sat in the red, got back in front, and then find you're going back in the red again. It's not trading. It's you're sitting on hope, and you'd be hoping then. Now, if the market rolls over, look what happened through the GFC. Absolutely poleaxe. Now, if you're happy to sit through that, good on you. Um, but ideally, you'd want to be taking notice of what's happening. You know that, okay, we ran up here. You were looking good at that stage. Straight back down again. You're in the red. You go, oh, hang on a sec, that's not a good thing. Straight back up, and we're starting to find weakness at a lower level as opposed to 190 on the weekly. You've got to take that into account and go, okay, what's the daily saying? Oh, the daily's saying a similar thing. We're getting a little bit extended, probably clearer. That market holding higher lows, okay, up until this stage was looking good. We've got that sell-off, took out the lows. Okay, maybe that's just a washout. Don't know. We've got this grind back up with a couple of red candles. Now, if this takes out potentially back down to 150, I'd be inclined to think that's a lower high. In conjunction to that, that's a major lower high, just like we drew up a second ago. Okay, these lower highs. So it's good to, I think, getting yourself in the routine of just plugging through some charts and just analyzing the price action and seeing see what plays out, and also having in the back of your head what's happening overall. Um, Another one that could get absolutely caned, and it actually is. We noted this one just coming into sort of about this low yesterday. Said this could basically capitulate completely. This is CAN Group, and don't forget you had this big run up. So anyone that's a big believer in your cannabis story and they're reading all about it, there's a big talk about it then, and okay, they're convinced this is a bloody good story. We're going to hold this. We're going to have some cannabis exposure. The fact that this market for the whole year just could not kick on again, and it started to come under pressure. That big pop up here. So anyone that's potentially buying it late into the trend is going to be underwater now. Anyone that bought in here is underwater. Anyone that bought it early is going to be thinking twice now, completely. You'd have to be, otherwise, again, you're just waiting in hope. You're just hoping that the market's going to turn, hoping that you're going to get back in front again, or you're hoping. Now, you don't trade off hope ever. I mean, that's where you're always going to start. You're going to be on the wrong side of the ledger. You want to trade what you see and try to step back and be unbiased. Don't let the emotions rule your trade. Let the data from the chart, the data, potentially fundamental data, talk to you and let you make your decisions for you, rather than just trade from emotions and then think, oh, okay, I don't want to close this one out. Let's just see what happens. Now the problem is there's quite a bit of fuel. There's a lot of fuel that would have been built up the last year, and a lot of pressure into the market from this move down. And if you're a buyer, if you're holding it for a while, you've had a lot of opportunity, but there's still some people that would just hold it. And you can see that sooner or later, everyone has a breaking point, and that's especially on the shorts. Um, it happens a lot harder on faster on shorts. We talk about FOMO on the way up, fear of missing out when you're chasing it higher, and that's what ideally you always want to buy early. You want to buy in the unknown. So when FOMO kicks in and the fear of missing out and people are chasing the market higher, that's what you want to see. You want to be part of that acceleration. You don't want to be buying into it. You want to be already holding. And then it starts running out of steam. You know that there's probably going to be some sort of correction. Then you want to take some partials or potentially take it off. And I'm always looking for that sort of stuff when it rallies up hard, and really starts to kick on. You want to analyze the price action for that. When it's a nice established trend, it's a fair bit easier. Everything doesn't get out of hand. Got a pop up, a good pullback, a pop up. Everything's nice and controlled. That's a bit different. Um, but really, on the way down, what we're talking about here is, and it all comes down to the psychology of holding a position. Well, we all do it. We've all done it. I've still got some crap in my portfolio at the moment, and that was purely based around fundamentals. And I still believe in the stock, even though it's down on its lows. But yeah, that sort of mindset, that sort of mentality, is what could really fuel a complete sell-off on, say, not on the overall market, but on particular stocks. When the markets had more than enough chance to prove itself, it had a whole year to start lifting and build some high lows and kick off with some. And this is well before the market corrected. This has done pretty much nothing since then. But what we're looking at is this could be the last straw that was it break the camel back. with this little push down through 190. You've got to look at that. It's starting to accelerate. It fell off the top of a cliff, the side of a cliff there, and then it popped back up. And just as it got through those lows at around 210, a 2-day rally, and the second day it was really run out of steam anyway, just back up to 220, and then rolling over again. So this, for me, in conjunction to what we've seen here, could really get a bit of a move on and really start to squeeze a lot of the people, because as they get further away from break even, um, they're going to have to start looking to bite the bullet and closing out, and plus this sort of thing, it doesn't come back too hard. They start, it starts heading down to the lows. People give up, especially after the amount of time it's spent hovering around that 280 to 3 or 320 mark. And if you've had more than enough opportunity to close it at maybe a small gain, a small loss, and now you're staring down the barrel of some big losses, you'd probably be easing out of this pretty quickly. And add to that the fact that this market could roll over, and the fear is going to drive the overall market. You're going to bail, and this could really start to roll over. So looking for things like this in this type of market is probably ideal. Does that make sense there, guys? Am I starting to preach a bit? So that was CAN. I think there's two more that we were talking about, CDA, and I can't remember. Ideally, what you want to look for, and it's going to be hard if the market does roll over. If you're looking to buy, your prime entries would potentially be, so this is CDA, Coden Limited. And if we can look at probably a weekly, I think your prime entries, when the weekly starts to lift, so we've got this leg up, it starts to consolidates hot sideways, which is always a good thing. Consolidate sideways rather than in a pullback mode is a better thing for the bulls than say, a pullback. Consolidate sideways is still a good show of strength, and then all of a sudden you get this high low start to pop up. What you're doing is getting the market contracting, and it's more the MAs coming back together, contracting, but it's still holding a key level around $2 at this stage on CDA. And then you get this pop up. So if this was negative, you would have expected to not get a higher low, but the market to at least retest $2, even push through it. And then you sort of go into that pullback mode, pullback with lower highs, lower lows, as opposed to just contracting, and then all of a sudden you build this high low. So that you could have got a nice entry on if you drill down to the daily there. That was at the start of 2018. Okay, somewhere around here, I think. Okay, it started 2018. I think that was about here. Oh, well, that's a bad chart, isn't it? Anyway, I think it's around here, and that's off your high low. You potentially could have, just by having the weekly in the back of your mind, you've got that $2 mark. I think it was $2 support mark. You've got a higher low. Now, your thesis is if this higher low holds, it's either the start of a new trend up, or we're just going to have a deeper pullback before we roll over again. And there could be some, a good little entry in it. But if you remember the weekly, you had a big trend up, we consolidated sideways. So we're looking to coming out of the consolidation. So really you should be biased up, as opposed to looking for just a bit of a one pullback, two moves, and then roll over. It's slightly different sort of price action. But yeah, this would be a prime entry. And if we just go back to the weekly again, this is your first one. You had a good run up to about 270. And this is your first pullback on your weekly chart back to the MAs. And you can see what happened. You can see why they're prime entries. And we're not the only one looking at them, because that market really kicked on strong, kicked up to $3 from about 240. So if you go back to the daily, this was your daily here. When we get up about 270, you had your pullback. And then if you're buying into this pullback, your daily MAs are high, your weekly MAs are high. They're both sitting on top of the MAs in the respective charts. So that's the kind of prime entry you want. Your weekly's going up, it's your first pullback on the weekly, you're analyzing your entry from your daily, and you do that purely to minimize your risk and to get more bang for your buck by just off your daily charts, by really drilling down. But that's ideally going forward of what you'd want to be looking for. Does that make sense? So going forward, I think next year I'd be doing over the holidays, just start to look for some charts, potentially your weekly charts, to get the most prime setups that could be playing out on your weekly charts. There could be some that are going to set up, but at least if you're going to buy something, you want the weight of the weekly on your side not in pullback mode in the week. Because if it's in pullback mode on the weekly and the market rolls over, it's probably going to stay in pullback mode, or that's going to start to accelerate. But if the market's rising on the weekly and then you get a pullback on the daily, or you get a pullback on the weekly and you're starting to refine that entry on the daily chart, I think what it's going to do is keep you out of trouble because it's a prime setup and the market can actually go sideways and really just not do anything when the overall market's heading south. And then you could reassess it as you go. But if you get a bounce in the overall market and then yours, your prime entry starts to take off, then great. It's just going to keep you out of trouble, I think. All right, let's look into something else. If there's any questions there, guys, just let me know. And I think the last one I want to touch on is APT. Now, APT Afterpay, I never know what to make of the fundamentals, and everyone talks up the fundamentals of this, saying how good they are, blah 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 blah. The problem is, it's not only APT around. You've got Zip Money, you've got a few others, and you can see them in all the retailers now. So everyone's got something at the moment. So if they haven't got APT already, how much more is that? How much more growth? It could have growth, but it's got steadily increasing competition as well. So is that enough to be a bull? Is that enough fundamentals to be a bull on this? And the fact that there would have been a lot of people caught on this one, they would have been caught because of the fundamentals, cleaned out, sitting on a loss. That's going to leave a bad taste in their mouth. If you've taken a loss on that and you're exited, you may not be looking at it again. It's just natural. It's natural human behavior. If you've taken a loss on something, even if it starts to look good again, you're going to be thinking twice. You've got a history of that stock, and it's not a good history. So there would have been a lot of people that have been cleaned up because of this run up to, what is it, 23 bucks on this move down. They've been stopped out. They've been smashed. Anyone that's potentially buying it through here, any new traders, how many more new traders will there be? So there's a whole lot of things that you got to factor in on what's happening. So what I'm trying to say, I guess, and long story short, is there's two ways you could look at this market. If it's purely on fundamentals, and okay, they've probably got good fundamentals, but you're not interested in what the current fundamentals are. You're interested in what is going to happen, where they're going to get their growth from. Because why would you buy it if there's going to be no more growth? Because you would expect that that's factored in. Maybe, maybe not, depending on your position. Now, for me, you can look at it like this, you can look at it like this. So there's sort of two ways to look at it. For the bulls, all right, what you'd be looking at, this is your contraction, all right? This is potentially your high low. You've got a little washout here as well. Doesn't really matter too much. You've had one, pop back up, two. You've had two big, that market's corrected in two legs, which is what we like to see. Okay, then you've had this pop up, and it's just broken out of this contraction lower. Come back down and retested this low, even with a little washout, then you come all the way back up again. So that, for me, could be relatively bullish. All right. And then you got this pullback, but what I don't really want to see is this market go too much lower. All right. To be a bull. The MAs are down. The market has to put in some work. It has to have a bit of a pop sooner or later. I'd love to see it have a pop up, then maybe pull back and get a bit more contraction, and then hold a higher low, after this pop up here. And this is the price action I'm looking at. That's your levels, sort of like that. Support, resistance. Oh, sorry. Support, resistance, support, resistance. That's your leg down, and then start to. I shouldn't have come all the way back down, but anyway, build your high low around here. That's sort of the zone I'm talking about in here potentially. If we can build that high low and start to work back up again, then potentially be bullish. And I think this is the kind of price action you're looking at. But what you've got to do also is take note that we haven't broken an anchor. And this is your anchor. We've retested that anchor, but we haven't broken it. So this could be exactly like the ASX at, was it 59.50, I think it was. We retested that anchor all the way off the lows. Didn't break it, and we headed south again. We went straight back down again. So there's nothing to say that, and we've got a little, potentially if you drop it down to we're on the daily here. Yeah, we're on the daily. This could be a lower high as well. So this market could still drive down. I'm not a big believer that it will, because I think it's had a deep correction already, and I think anyone that wanted out is out. So you got to take into account, if you're a bear, how far have we gone down, and if you're a bull, how far, if you're, how am I trying to say, if you want to be bull, if you're actually biased up on this one, why would you be biased up? Okay, I'll be biased up. So a good strong leg up. Okay, we've corrected off those highs, probably a 60% retracement, or maybe a 50 to 60% retracement. back down to 11 bucks. We're potentially holding up $11. So it has cleaned out a lot of long positions from, potentially around $14 zone. This little consolidation sideways led to that rally up to 23. They've been cleaned out. We've taken out those lows. So if you're not out, okay, you're hoping for the best. Again, it's cleaned out a lot of these sort of late buys into that trend up. Only the believers will probably be hanging in here. Now, to bring in more fuel into the market, you need it to hold up. You need this structure to start playing out. And that was a structure what we're just talking about here. If this starts playing out, potentially anyone that wants to take a step and nibble at it has been successful on that. Maybe got out at these highs, got out here from the lows, maybe looking to get back in again because they're a good believer in the stock. Then you want this higher low to play out, and I would love to see this hold up just here. Otherwise, I'll just be sitting there on the sidelines for the moment. So what I'm trying to say, I guess, long story short, is at the moment, this is an each way bet, long or short. You've got a case for both going short and going long. So in essence, I'm probably leaning towards the upside, but I think just the last couple of days have left me thinking, and that's probably because the S&P has broken through a key level, key support zone. So just be wary. I think there's going to be a lot of stocks like that fear drives the market lower, are not really going to care. And the better the setup, the better the price action, the more prime the price action, the higher odds of success, even in a bit of a bear market. Or your best to probably just stay into cash. Stay into cash over Chrissy. I don't think if the market's heading south, I think it's got a long time to repair itself anyway. So you've got more than enough time to have a bit of a holiday, have a break, have a drink, fatten up over Christmas, which I intend on doing on the turkey, and just reassessing it when we come back. All right, guys. So any questions, feel free to chuck it in. Otherwise, we'll go through BHP and we'll look at CBA for now. If there's anything else you want to look at, quickly chuck it in. Thought it was quite a bit for me to talk about then, and I got sidetracked too. So I hope that all helped. And what I'm saying is making sense to, from a technical point of view. I know there's a lot of people here still trying to learn the technicals, still trying to get a grips to it. And feel free to send through any questions. If there's a chart that you think's bullish or bearish, I think yesterday when we were talking about it, Laurent might have been a bit of a bull, but that's why we started talking about it a bit more. And I was just explaining my side of it, what I'm viewing and what I'm seeing. It's hard because he might be a bull and a bear, but both cases might be, right. There's a thesis for both. You could still be a bull in something that to me looks like it's rolling over. It doesn't mean I'm right. It could just be he might have a narrow target, a really tight stop, and just going for a short, really short term trade. Whereas I'm looking at the bigger picture. So you really got to take into account what everyone's doing. Does that make sense? So someone could be talking up the market, oh, we're going higher. Someone else is talking it going low. You've got to ask them for what they're looking at. What chart, what daily, on what time frames, because it's all in respect to everything else. I hope that makes sense anyway. So let's get into it. BHP, and that is BHP. So for me, just at a glance, look what we've done. We've got, and it's quite clear, you've got the market run up. So just taking it from left to right, all we can do is take it from left to right. What we're seeing, what price action we're seeing. You've got best fit there. So if this was a pullback, say, this is your next leg up. What we've done here is sort of chopped around here, and that's fine. That's a good sign of strength. But what it is our anchor. Just here, what we did, I wouldn't say that's that's a new high. That can be. You got this push up here, but then it's come down, retested, straight back up, took out the high. So that for me is really choppy. And then we've come back down, popped back up, lower high here, and you can see we're sort of hovering around that overbought position. Press back down, taking out the lows. Okay, pop back up, and again, you're well into overbought territory. So if it was a strong market, you probably would have think, because you've got to remember, when people want to sell, they'll sit on the offer. When people want to buy, they sit on the bid. So if you're trying to buy here, I mean, especially on the selling side, just think of it this way: that when it goes from overbought to oversold, that's your pressure of your buying. Now, if we got pressure, quite strong pressure, when it's running out of steam, this is the way I view it anyway. It runs out of steam, it goes from overbought to oversold. And you've got to take into account where it is on the chart. Now, if we've gone blasting through a resistance zone, okay, that's a good thing. We're extended up here, but that's a bullish sign. So then you'll be looking for your pullbacks and buying into a pullback. But when you only get up to a resistance zone, and it's taken a lot of pressure to get there. There's a lot of sellers in the way to get through. And whoever, say you've got 100,000 shares that are worth of buyers wanting to buy, and there's 100,000 shares on the offer, it's going to chew it all up. So all the steam, all the buyers, all the bulls that are wanting to get in are in, but they could only go so far as how many sellers are there. Now, if you've got 50,000 sellers, yeah, anyone that wants to buy has to buy at a higher level, has to start chewing away at higher levels. And that's why you get these pops through resistance. You get an extended move up. But when they don't, they only go into resistance zone and you're running out of steam. You've got to take that into account. You've got to take that in the context of what's happening in the overall market. So for me, I wouldn't really be a bull. I'm seeing the market fall short at highs. It's running out of steam. So I wouldn't be buying in there. If I wanted to buy, I'd want to see a pullback to a higher level, as opposed to coming all the way back down to below, was that about $30, heading down to 30. I want to see it somewhere around 32.50, say, holding a higher level and being, heading towards that over. It doesn't have to go right down to 10% or 20% in the stochastics, but more on a pullback. I want to see the selling pressure quite hard, but I want to see that being soaked up by the buyers and potentially sitting back on top of these MAs, all that sort of thing, and then start to chop around here. Does that make sense? And I want to see those buyers making a stand, around 32.50 and soaking up the selling pressure. And again, if you just flip it over, this is 100,000 sellers that want to get out. 100 worth of sellers. It could be one seller. It could be 100 sellers. You don't know. And that's all the pressure that's going to come into the market on the sell side. But then you've got buyers starting to stack up at higher levels. They just can't. The sellers just cannot get through those buyers. And then sooner or later, the buyers are going to take note and think, hang on a second, I'm going to have to buy at higher levels. If I want to be in this, and I think there's going to be a move back up through 36, I'm going to have to buy at a higher level. And that's why you get these high lows starting to build. Does that make sense? So yeah, at the moment, from this chart, if I want to buy, I want to see this type of thing on a pullback. But the fact is, we've also got really choppy action. You can see, okay, the market pressed up, straight back down, straight back up, straight back. It's really choppy. Okay, so if we go back to a weekly chart just to see what the weekly is doing, for the weekly, even you probably have to take it back a step. Look where the monthly is. The monthly is at a key resistance zone. It's 36. Hence why we're getting that chop. If we go back to that weekly, all right, so we've got that's your key resistance zone. It's off the monthly, somewhere around 35, 36. We're coming up, and it is a key zone. This is your leg up that you're analyzing, and we're smack there. So for me, I'd be struggling to buy this. You can, but I'd also wouldn't sell it yet. It hasn't set up for a sell because that trend is still up. It's still respecting that trend, holding higher lows. You can see it's holding higher lows. You've had a move up, contraction, move up, contraction, move up to the highs, starting to get choppy. So there's some people that are starting to think, okay, in conjunction with what the overall market's doing, we might be on our highs for quite a while. We might be due for a bit of a pullback. We might be due for a break lower down to 24. You don't know what's going to happen. So whoever bought it nice and early, even on this first pullback or even on this pullback, maybe looking to book some profit. Book some profit over Christmas, thinking the market's going to be going to a bear market. The S&P is going to get hammered. We might get hammered along with it. All these sorts of scenarios is what's going to fuel the mentality to potentially get out of this market, to get out of BHP and to sell off. Not saying it's happened yet. So if you're long, you potentially just chuck your stop at $30 and leave it. If you're wrong, if you're right and it continues higher, great, doesn't matter. But if you're wrong, you do not want to hold your stop below here, or you do not want to give it too much room, because if it's going to go, it's probably going to go quite hard, I'd suggest. Because all this fuel of people that have been buying all the way up, fuel that are in the market ready to get out. They have to get out sometimes. So that's why I'd be concerned on what's happening on the daily. It is quite choppy. And then if I wanted to buy it in here, I'd like to see this hold up, but I want to see it spend some time, just chopping around, holding some higher levels, cleaning out traders and slowly starting to lift. And you can see that bias, but I think time is a big factor as well. I wouldn't just buy it for a push through 34, hold the stop below there, because that could wash it out straight back down and clean you out. Away you go. Advance for setup. No, sorry. Vin, I'm basically, it all comes, I guess, from what I've learned in the past. It's not really scanning software. With with respect to scanners, you can go to investing.com, gives you a bit of a scanner. You can play around those scanners there. I think there are some stock scanners on the ASX. You can put in some basics, moving averages, volume, uh, all sorts of things just to scan over it. This program is called Spark. You can also put a few, if I just go over that, where have I got some? Scanners here. So what I've done here, I've set up, but don't forget, this is kind of, where are they? Maybe I haven't got anything. Oh, here we go. I don't know if you can see that, but I've got a price range. So I can put in a price range, I can put in turnover, I can put in market cap. So I can sort of scan with respect to the size of the company and whether it's on the rise, whether it's going up or going down. So I've got all these sort of lists going up. I can click on this and say, okay, at the moment, I've got this set to what's moving up, and I can click it over what's moving down, what's moved up in the last 15 minutes. You got your delta here. You can press it to your delta, which is different. What's moved up? So that can be early signs that, okay, something's starting to move, something's starting to roll over. So don't forget, this program is, I think it's about $200 a month. So I think there's an easier way to do it through investing.com. What's the next one? CBA. Let's take a look at CBA. CBA, it's quite clearly the market's heading south at the moment. This is just bouncing off the MAs on the weekly. So at the moment, no reason to be a bull. On your daily too, if we break through that 68, we could be heading south, and that's in conjunction with what's happening on the weekly. Potentially if you're looking for a short here, you can short it through 67.50, say, with your stop above 71, and just see if we can extend this move so that you take it from high to low, extend it down to 63. It's good 1.5 to 2 to 1, I guess, trade in that, if that's the case. But definitely on the downside for me at the moment. Until something changes, I think your banks are still going to be linked to, I guess, what's going to happen with rules and regulations, how they're going to get, is something going to change with the way they've got to report, or, with ASIC and was it APRA and all these sorts of things with the commission that's just gone through. Because everything that's come out has come to light. There's pressure on them, and of course, if there's rules and regulations are changing, they're going to take time, because these guys, they're going to have their Christmas. They're going to sit there and debate it as well. So it's going to take time to go out. So if you wanted to buy it, you'd probably be holding off. Any of your funds might hold off in anticipation that what's going to happen. Why get in and find that they're going to be a lot harsher on the rules and regulations, and you find that you sit in a losing position quite quickly. So I think these things might be still weighing on the banks and the share price. On top of that, the market sells off, the banks are going to get hit. You're going to get ETS, they're going to sell into them. You've got the STW, things like that. They're going to have to adjust as the market heads south, weightings of everything, and the banks are a big part of those. So I see more downside than upside at all on any of the banks, really. One I have got my eye on is potentially Bendigo. I see that as different. We had a big press up, big pullback in GFC, that pullback in the GFC. Higher low, press up, potentially another higher low. Hasn't continued on up yet. This could be a zone on the weekly, say 975. It is looking weak still, but hasn't broken through, whereas CBA has. CBA is trending down, and we're sort of off the weekly, bouncing off the MAs at the moment on the way down. Whereas Bendigo, I'm not going to buy it at all. In saying that, that press up, taking a bit of effort just to get to say 975, so there could potentially still be pressure in that. But I'm not looking. I'm just got my eyes on the bank at the moment. On the banks, my eyes on the banks at the moment. Just keep an eye on them to see what's going to play out. But I think they're really going to be linked to what's happening in the overall market. We're down 25 points at the moment. We just dropped off 20 since we've been speaking. Westpac, well and truly heading south. And I don't think it's the right play to, we say this all the time, if you're going to trade it, you're not just going to buy it down here because it's so-called cheap. Don't forget, everything can get cheaper. All right, so why not buy it? And again, if you're a value investor, okay, that's great. You buy it probably knowing that, over time it's going to be higher again. That's great. But I think what you're doing is if you're going to put 10 to 100, say 10 grand into the market, I don't want to waste 10 grand when I could be using it somewhere else, even on the short side. I don't want to be wasting it sitting in a stock while I'm waiting for it to bounce back. I want to buy it on the rise. I want to get bang from the buck, and that's where you're always going to increase your strike rate or your returns. And like I always say, if you have to give it up because you're buying off a higher low, there's always going to be someone that's going to get a better fill than me. But I think over time, my results are going to be a lot better because I'm buying when the market's rising. I'm not wasting my time locking up capital into a trade that's going nowhere or is down, waiting for it to come back. Yeah, but I'm going to get more bang for my buck. And if I have to give up 5, 10, 20 cents to get that result, I'm happy to do it every day of the week. I hope that makes sense anyway. What else we got? CSL. Let's have a quick look at that. Wouldn't go near this with a Bard's pole on the long side anyway. I think that's CSL just had a good run up. And at the moment, that for me is nowhere near a good setup to go long. If you're in a bull market, yeah, you could probably risk it because it's probably going to be capped on the downside. But at the moment, I think it's going to be capped on the upside, especially the fact that recently it's been heading south for a good part of the last 3 or 4 months. So it's been heading south for the last couple of months. Let it keep going if it has to. Just going to the weekly, if we just go back a bit, because don't forget, it's the mentality of the market we're concerned with at the moment. It's not, it's not your fundamentals, it's not your technicals, because we could have, say we've got this trend here, all right? Okay, that's a fair call. You might want to buy off that trend, but the fact is the market's under pressure at the moment, and there's nothing to say we can't just creep through that. We sell off down through here because we still got this bigger trend, and then okay, that opens the door to a move down to what's that? $210. The 210? No, 110. Am I right? What am I looking at? 110. Okay. If we can't hold up here, if it was a bull market, like I said, the US is heading high. Before we, topped out on the US and before we started coming under pressure on the ASX, if we're in a bull market, yeah, you could probably bank on the fact that we're going to hold up here, bounce off this longer term trend and start to rise again. But there is nothing to say that you just buy off here, buy off that support zone. You want to see again, it's coming to that support. You want to see you want to see the price action play out and know exactly where you're going to place your risk. And the name of the game is to place your risk as tight as possible. Right? To give up, if you're wrong, you're not going to lose too much on it. And that's the aim, rather than have a nice wide risk. At the moment, I don't see anywhere where I'd place my risk on the weekly charts at least. And even on the daily chart, buying it here, that's still heading south if you bought it here. Even if you want to see it pop, you want to see it get through 185, even trade up to 195 and then pull back and buy on your first pullback. And then by that time, if that plays out, all these MAs may be starting to rise, but at the moment they're on the way south and they're starting you can even see lately they're starting to expand down. They're starting to come apart, which is pressure on the downside. So just be wary of that. All right, we'll probably have to call it a day there, guys. I hope you enjoyed that. Now, I just want to say from both Devin and myself, thanks very much for joining us, and thanks very much for being part of the streams and being part of TradeSetup in the last year. Anyone that's new, thanks for joining us. Anyone that's been with us for quite a while, it's really appreciated, and the support you've given us is really appreciated. Hopefully, we're going to get into bigger and better things next year. We really want to, push and grow. We're going to start getting into some web seminars, doing some courses, doing some mentoring. There's a whole lot of bunch of stuff where we think we can help and offering, and everyone's going to be. You'll be notified about all that once we get it up and running. So, like I say, Merry Christmas. Thanks for joining us, and we'll be back in. I think it was the 11th or after the 11th. That's a Friday, so it'll be the Monday following. What's that? 14th, I think it is. 14th of Jan. So I hope you all have a good, healthy, safe Christmas and New Year, and we'll see you back in January. Like I said, any questions? If there's anything, I know the markets are still running. If you've got a problem, feel free to send me an email at support@tradesetup.com.au. Because I'm more than willing. I'll have my computer when I'm away, Won't be on all the time, but feel free to send through a chart if you're having issues with something, if the market's going to cave in. And like I said, I hope most people are out at the moment and just watching the action from the sidelines. I know it's frustrating, and it's even more frustrating if you're in, but that's the way it is. Better to be on the safe, be on the safe side than be in the market. Um, Going into a holiday period where this, volumes could really thin out, or and really start to pick up some steam on the downside. So you rather just have enjoying yourself, enjoying your break. All right, guys. Thank you very much, and we'll speak again next year. Have a great Chrissy. Cheers, guys. Bye.